If your home is covered by the California Fair Plan, you've probably been told that you also need a DIC policy. And you've probably been told that with very little explanation of why, what it actually does, or how the two policies work together. This video will walk you through how the Fair Plan and DIC policies are structured as a pair, where the gaps between them tend to show up, and what to look for on your own policies. The California Fair Plan exists for one reason: to make sure that homeowners can get coverage when the standard market won't write the risk. That's why it's called the insurer of last resort. And because of that role, the Fair Plan is intentionally narrow. It is a named perils policy, meaning it lists by name the things that it covers. The standard list includes fire, lightning, smoke, and internal explosion. Anything outside of that list is not covered unless you've added it via endorsement. There are optional endorsements available for things like windstorm or vandalism, but those are add-ons that you have to select. The California Fair Plan caps residential coverage at $3 million per location, and that cap includes your dwelling, your personal property, and other structures combined. Your declarations page is where all of this lives for your specific policy: the perils, the limits, the endorsements you chose. That DEC page is the single source of truth. DIC stands for Difference in Conditions. The name describes the job. It's built to address the difference between what the Fair Plan covers and what a traditional homeowner's policy typically covers. The categories DIC policies are commonly structured to address include liability, theft, water damage that isn't from flooding, and personal property. Some DIC policies also include loss of use coverage. That's money for living expenses if your home is uninhabitable after a covered loss. DIC policies are designed to exclude the perils that the California Fair Plan covers: fire, lightning, smoke, internal explosion. That's how the two policies pair without paying twice for the same coverage. The California Fair Plan handles the fire side, the DIC handles most of the rest. Here's the part that doesn't get said often enough. DIC policies vary significantly between carriers. Two DIC policies with the same price tag can have meaningfully different coverage. Limits, exclusions, sublimits, these all can differ. The structure is similar across the market, but the specifics are not. That means that having a DIC policy doesn't automatically mean you have the coverage that you think you have. The specifics are found in your policy documents. Now, this is the part that most people don't think about until a claim happens. The California Fair Plan and your DIC policy are two separate contracts with two separate companies. They are coordinated by design, but they are not connected operationally. What that means in practice is that if you have a fire loss, you file with the Fair Plan. You'll deal with the Fair Plan's adjuster, the Fair Plan's deductible, and the Fair Plan's claims process. But if you have a theft or a burst pipe or someone gets injured on your property, that's a claim to your DIC carrier. Different adjuster, different deductible, different process. If a single event triggers both policies, which can absolutely happen, you may be working two claims at once with two different companies on the same loss. And this isn't a flaw, it's just how the two policy structure works. But it's worth understanding before you find yourself in the middle of it. Now, here are a few specific things worth knowing about your setup. This is not advice on what to change, just what you should know. Number one, your DEC pages, both of them. The Fair Plan DEC page lists what perils your specific policy covers and the limits on each coverage category. But the DIC DEC page does the same thing for the wraparound. Sit them side by side once and take a look at them. Most people never do this. Two, your rebuild cost versus your dwelling coverage. The Fair Plan doesn't estimate rebuild cost for you. That responsibility sits with the policyholder, and that's stated directly on the Fair Plan's own website. California rebuild costs can vary significantly by region, and post-wildfire rebuilds tend to run higher because of permit timelines, contractor demand, and building code requirements that may not have applied when your home was originally built. If your rebuild cost is above the $3 million Fair Plan cap, that's a structural question that's worth raising with a licensed agent. Number three, your valuation basis. Whether your California Fair Plan is set up to pay actual cash value or replacement costs. The default is ACV, which factors in depreciation. That means that your payout reflects the depreciated value of what was damaged, not what it costs to replace today. Replacement cost is available as an endorsement. Your deck page will show which one you have. And number 4, how the deductibles stack. Know what your fair plan deductible is. Know what your DIC deductible is. They are separate. Number 5, what your DIC actually includes. Liability limits, theft sublimits, water damage coverage, loss of use. These vary by carrier. Read your deck page or ask your agent to walk through it with you. If any of these situations apply to you, it might be worth a conversation with a licensed California agent. Number 1, you've never seen your deck pages side by side and you're not sure what's actually covered. Number 2, your home's rebuild cost might be near or above the fair plan's $3 million cap. Number 3, you've had a major change, maybe a renovation, new structure on the property, or a change in occupancy. Number 4, it's renewal time and your premium has changed. Number 5, you're not sure whether your current DIC actually pairs well with your fair plan. A licensed insurance agent can look at your specific documents and tell you exactly what's there. If you're on the California Fair Plan and you want a licensed insurance agent at 5 Bays Insurance Agency to take a look at your setup, your fair plan, your DIC, how they fit together, go to FBIA.com/manage my fair plan. We do this every day for California homeowners just like you, and there's no cost to having us review exactly what you have. Thanks for watching and see you next time.